Hello and welcome from MaxPlans for Life. This is our windfall gains, simple tax strategies for all kinds of gains, planned or not. First, our disclaimer. All information discussions regarding potential windfall gains, events, taxes, and plans are for educational and entertainment purposes only. MaxPlans for Life, Inc. and all affiliate companies, representative associates, or employees are hereby held harmless and disclaim any results coming from this or future events regarding tax implications and strategies. Effective and established tax planning needs to be done with licensed professionals of your own choosing. MaxPlans for Life, Inc. is a Utah-based service owned by attorney David Stephenson. David's been practicing law, especially in estate planning, for over 30 years. Bob Adams, the manager of MaxPlans for Life, has a 31-year career as a professional tax preparer specializing in tax strategies for small business owners. All the services offered by MaxPlans for Life, Inc. are considered vanilla, or already proven methods acceptable as standard options for the IRS. The idea of MaxPlans was created as the need for a simple, practical, and an economical way to prepare for windfall gains became apparent. The items being presented to you in this video are legal, ethical means, and apply to about 90% of known potential and unknown financial happenings. Once you elect to utilize any of these services, which can be applied to multiple gains, you become a member with access to our website, which contains additional educational information. So what kind of windfall gains can use MaxPlans for Life? Well, exotic currencies, inheritance, cryptocurrencies, forex trading, precious metals, real estate, lottery winnings, gambling winnings, and gifts. So let's just take an example. We have an investment that has finally paid off, and all the dreams came true. But then one day, there's a knock on the door. Life after winning the lottery or successful investing may not stay glamorous forever. Whether you receive $500 million or $1 million, about 70% of large windfall recipients lose or spend all that money in 5 years or less. Worse than spending all that money is the taxes that were ignored. Suddenly all the joy, prestige parties, and items purchased for friends dim under the scrutinizing eyes of the IRS. It doesn't have to be this way. Properly planned tax strategies, either before or after sudden wealth, can reduce, defer, or even eliminate taxes on those gains. Let's look at just one example how tax planning made all the difference. In this investment, we have an investment that costs $1,000 is projected to return to $1 million. Now, this particular investment type is treated as an ordinary income. They decide to cash it all in at once. Here's the results. A taxable event occurred at the moment the exchange happened. It's exposed to a federal rate of 37% and a California state rate of 13%. That means 50% of their investment is now gone in taxes. That leaves $500,000 for them to invest. As they invest those remaining funds, the gains from that investment is taxed again. And because it's an investment, there's exposure to potential losses in the markets. Their investment, which could have served them the rest of their lives, is now small or non-existent. So let's look at the same investment but put into a Roth IRA. The Roth IRA is a retirement account funded by actively earned and taxed income. The investment needs to be in the Roth prior to any gain in value. There are certain requirements to qualify for a Roth. Contributions are limited by age and income. The Roth must be aged the required 5 years and withdrawn at 59.5 years of age. The gain, because it's increased under the umbrella of the Roth, is tax-free. In addition, any other investments done in the Roth with the revalued gains are also tax-free. And the funds in the Roth can be handed down to heirs tax-free. But the Roth is also considered to be part of an estate. Planning around estate taxes is also crucial and should be part of your overall financial tax planning. Because the funds coming from the Roth are completely tax-free, you may be used in any way the owners wish. Establishing an ongoing investment strategy, potentially including an annuity, could gain a lifetime of income, once again, tax-free. So let's take a look at another idea. It's called the Charitable Remainder UniTrust, abbreviated as the CRUT. Now, the CRUT is a great post-instant wealth option. It's an irrevocable trust intended for charities upon the beneficiary's passing. The funds are put into a CRUT and exchanged in a tax-free environment, meaning there was no tax applied to them, then invested and put in an annuity for a guaranteed payment. The beneficiaries receive payments that are taxed based on the classification of the investment. The trust beneficiaries receive about 5% annually on the value of the CRUT. That comes out to $50,000 per year potentially for the rest of their lives. They invested the entire amount tax-free under that umbrella and only pay income/capital gains tax, depending on the type of investment, taxes on the payments to them. Upon their passing, the remaining funds are released to their selected charities. They got a write-off on Schedule A for the original contribution, potentially recovered their original investment of 20 years or longer, depending on their lifespan. Notice, the CRUT is the gateway to satisfying most investors' long-term plans. We'll get into that in more detail a little later. So let's take a look at the same thing, the CRUT, but with an annuity. The CRUT offered these tax-deferred income, reducing their tax exposures while retaining the full value for investing. They may elect to use an annuity. The annuity offers benefits besides potentially guaranteed income for life. Long-term health insurance to cover anticipated medical expenses from aging, and death benefits for the amount originally put in the CRUT, which goes to their heirs tax-free. An annuity, just for your own information, is a long-term investment that's issued by an insurance company and is designed to help protect you from the risk of outliving your income. Through annuitization, your invested funds, which you contributed, are converted into periodic payments that can last for life. Now, there are 4 basic types of annuities to meet your needs: an immediate fixed, an immediate variable, deferred fixed, and deferred variable annuities. You don't need to worry about those for right now. When creating your CRUT with an annuity, you get to select the type that works best for you. A return over 5% retains your original principal. Also, that's going to be dictated by your scale of risk upon which type of annuity you wish to use. Now let's take a look at it one more time, but this time we're going to add in a private foundation. The benefit of using the CRUT is not only the deferred taxes and lifetime income, but the remaining funds on passing goes to charities of your choosing. Many investors desire to share their new wealth with charities suited to their perspectives. The CRUT allows up to 6 chosen charities to benefit from your remaining funds. The option to retain those funds for the family is to create a private foundation. You can change your CRUT and indicate the remaining funds to your private foundation at a later time. This would allow the perpetual giving while having the family, potentially for many generations, reap the rewards for your windfall gain. So your original investment has paid out for a lifetime, covered the medical costs, paid heirs with death benefits, and possibly continued for generations. Now let's do a real quick review of some of the valuable things about the CRUT and your financial plans. The CRUT is the gateway. It defers and reduces taxes on your investment exchange. It can offer you and your spouse, if you're over 40 years of age, lifetime income with a lower tax rate. It can offer you and your spouse 20 years of income at a lower tax rate if you're younger than 40 years of age. It can potentially offer long-term health care and death benefits. It can be invested in various options to maintain or increase its value. Tax-free, meaning all transactions under the CRUT are non-taxable. You can give your remaining funds to up to charities of your choosing. You can give your remaining funds to your private foundation and maintain your charitable desires after you are gone, and the private foundation could potentially provide income to your heirs and their heirs for generations yet to come. And it also, most importantly, reduces estate taxes. A real quick review, I like this part, the tax benefits of using a CRUT. So let's just say you go in and you exchange without a CRUT, $1 million. Well, the federal taxes for singles would come out to $329,429. And if you're married, $297,236. So that would leave a single person with $670,000 plus and $702,000 plus for married. So then you add the state, the county, city taxes, which is an unknown amount, and potentially lose nearly 50% on taxes. Any gains from investments after paying are still subject to more taxes. Now, with the CRUT, there's $1 million. Federal taxes for the single married are zero. State county taxes, they're zero. And the amount to invest is the full $1 million. Now, Eventually, you're going to get paid for coming out of this. So you get 5% for single. That would give you a total of $85,960, and if you're married, a total of $51,860 over 20 years. So state and county taxes obviously will be less, but more importantly, 100% of your $1 million went into the investments, and future gains inside the umbrella are tax-free. So by using a CRUT, you would save, if you're single, subtracting that $329,429 from and minus the $85,960, you save $243,000 in taxes. And if you're married, you save $245,000. That's almost $250,000 that's back in your pocket. Now, one final note on estate planning. When large windfall happens gain, one of the usually overlooked aspects is estate planning. Estate tax is applied to the remains of your estate once you and your spouse pass away. Its percentage is around 40% on funds over an established cap. The cap is usually established by each new administration and can be subject to wide swings in value. For example, the cap on an estate now is over $12 million, $24 if you're married. If your estate, all your ownings, real estate, business, equipment, jewelry, accounts, etc., is valued less than the current cap, you don't have much to worry about. But when the current cap expires in 2025, it's scheduled to return to $7 million or $14 million if you're married. And if the current administration achieves its desired cap, it would be less than $3 million and $6 million if you're married. This is where gifting assignments come into play. Creating these documents before the gain, assigning individuals and amounts prior, can reduce the estate value. These are easy to create and to store. In the end, you may not need them, but it's better to have them and not need them than to need them and not have them. These strategies can be applied to any investment. As you can see, there's a huge difference in results using practical tax applications. MaxPlans for Life, Inc. offers 4 easy procedures to assist in preparing for windfall gains. These are unlimited gifting assignments, which are documents used to reduce potential estate taxes by gifting anticipated gains to family members prior to the actual increase. Unlimited digital documents that are stored as PDF files to be used as needed. Roth options. These are instructions in the links for a precious metal Roth for exotic currencies, one-member LLC Roths for individuals to manage multiple investments on their own, and the crypto Roths. Also, third is our charitable remainder UniTrust, or the CRUT, which is a series of documents. You could potentially have lifetime income, annuity with health and death benefits, and potential use of remaining funds for a family private foundation. And the website with continuing education and webinars, estate planning, crypto investing and taxes, resources professionals in your state of residency. Now, selection of any or all of these services automatically enrolls you as a member with access to our ongoing education. So thank you very much for spending a few minutes with us this evening. To learn more about MaxPlans for Life, talk with the person that referred you. Our affiliates are well versed in these options and are active members of MaxPlans. And we look forward to sharing these tax-saving options with you in the near future.